Okay then, let's put the RSI on our chart. So what we do is we go to Inserts, Indicators, same for every of course indicator you're putting on there, into Custom, and then click on the one you want. We want the RSI. Now let's have a look at the tabs. Common, nothing to change here. Inputs, well, the RSI only works on one period, and that's the common period, or the usual period to use. The standard value or period value is 14. If you wish to change that, you'd simply double click with your left hand mouse and you can change the value as you wish, but I leave it on 14 when I use it. As I say, most traders use the standard value, which is 14, so as far as I'm concerned, that's where I leave it. If you want to, as I've said before, maybe play with this and experiment with the value, come back, change it and see how it actually affects how you use the RSI. That's entirely up to you. It's something you can do at a later stage. Colours, we can leave that as is. Levels, this is what I want you to change. Now I use red for my actual style colour, and then what I want you to do is click on add, and I want you to type in there 30 and click on add once again, click on add again, and then I want you to type in there number 70, once again click add, and then click OK, and that's now going to put the RSI, as you can see, on your charts. Using this line here, look, you can lift it up and down. Now for what we use it for, you can actually keep it quite minimized within your charts. You want more on the actual charts than you do on the indicator, so as I say, with the RSI you can actually keep it quite small, but for demonstration purposes I'm just going to increase this to make it a little bit easier to explain. Now, why did I put on a 70 line and why did I put on a 30 line? Well, a lot of traders use the RSI to give an indication as to an overbought or an oversold situation. By that I mean, if we're in an overbought situation, we could potentially be going from a bullish move, overbought, to potentially an overbought situation, a reversal, into a bearish move. If we're oversold, you could be looking for going from a bearish move to a bullish move, and that's what I mean by overbought or oversold. And how they use this, or how most traders use this, is when the RSI, you can see the line here, when the RSI breaks the 70 line, so when it breaks the 70 line, traders would consider the market to be potentially overbought, and we could be in a situation where we're going to see a reversal in the market. And you can clearly see here, look, it broke the 70. If you use your crosshair and line this up like this, there you can go, you can see now that we have this position right here at the overbought, the 70 level, above the 70, and this is the point that we're actually looking at right here. So we have a break of the 70, the market is potentially overbought. This is the area that we're looking at. Let's draw our trend line. This is the trend line. And what we can now see is, you can now see that what we've done is we have potentially now, we've broken the trend line. Here we can see that we're clearly saying on the RSI we've broken the 70, and therefore we are overbought, and potentially we're going to see the reversal, and therefore it would add weight to your trade. So you're going to go short here, you'd look at the RSI, is it in an overbought situation, so potentially reversing and going from bullish to bearish? Yes, it is, and therefore that's going to place a little bit more strength on your trade, on the short trade. So that's how we'd look at it for an overbought. What about